All right, welcome back for the episode of Carnivore Trades. Today is Thursday, February 2nd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So earnings today, and a very interesting day for the market, to say the least. So obviously the big story right now is Amazon, Apple. They just reported here. Amazon and Google are both kind of all over the map right now. They haven't really picked a direction yet. And Google is a little bit higher here. Apple reports closer to 430. I don't know if I'll be able to cover that here, but regardless, there's a lot to talk about anyway, as you guys have kind of already figured, I'm sure. But basically, Meta here up a 29% here on the, or excuse me, 23% on the day. Which is totally typical of a mega cap company, right? But in any case, that kind of pulled some of these gains forward for Amazon and Google and Apple. So it's not something you see very often. If these three names were up ahead of earnings today without that move from Meta, I would have been very suspect of this kind of gap up. So very rarely do you get a stock that gaps up the day of earnings or down, right? Usually you're going to get, if that happens, it's almost like, are they trying to paint the tape? You get kind of that, it's almost like you're going to look for the opposite direction almost every time. But they were kind of basically rallying off of Meta. So a lot of that kind of got priced in, and it wouldn't surprise me if Amazon and Apple and Google, they're basically kind of just settling here. So we might just see them kind of settle right now, as a lot of these gains have already been pulled forward. So not really so much like a sell the news, but a kind of hold the news type move. I would be very shocked if they just really pumped up here, specifically Amazon and Google. Best thing you can hope for, I think, would just be that they hold the gains right now. And I think that's basically what they're doing right now. Now, tomorrow morning, who knows what could happen? Maybe Apple comes out and misses completely. If that happens, that could, cause things to reverse here. But overall, craziness here today. And I would call it, FOMO, Euphoria, definitely getting into that category here. We're now getting parabolic, and we see that rising wedge obviously is breaking bull here. I've said this in the past before. This is very typical too, to see a rising wedge kind of break bull and then kind of roll over. We're also kind of putting in what I think will be, and the Qs I think are an even better example. This is parabolic as well, but possibly like an island. So you get kind of these, if you're familiar with the island reversal, it's when you get a big gap up after a long, extended run, and then you consolidate for a few days or maybe even just one day, and then it kind of reverses. I think that's what's going to happen here for the downside. As far as the markets, I'm still going to give them the upside bias for now, because I don't see any really any holes in the bull case right now, except for a few minor ones, but they don't necessarily have to play out tomorrow. They could play out next week. They could play out in a week after that. Also, it's very rare for a market to reverse on a Friday, whether that's up or down. Typically, if we were going to reverse, you'd want to see us gap up today and then reverse today and then follow through on Friday. It's not to say that it can't happen. I mean, again, Apple could completely, come back in, but I would say it's much more unlikely at this point here. But either way, market is holding up here. Now, the red flags that I would say, the VIX had a nice bid here. So that is up nicely, and it held that 17 handle. If we go back to, basically, this is, pretty much retracing the bull market here, or the bull market in the VIX, I should say, right back to the January breakout. So basically round trip there on the VIX, and that got defended today. You can also see here on the VVIX, which I don't cover that often, but volatility of VIX, you do have higher lows now on the VVIX on the daily time frame. So maybe some stuff going on underneath the surface here. Another thing that I can pull up here, if I've got it. I'm not sure if I got it on here. There we go. So I'm just going to show you the dark pool index. This is of yesterday. I haven't checked it today yet, but that has surged into this rally here. So we're seeing kind of smart money exit out the back door, and I think we have to look a few steps ahead. So basically, what Powell was saying yesterday, he's kind of like patting himself on the back a little bit. He talked about yes, inflation's coming in a little bit. I think that right now the stock market's looking at that and saying, okay, that's a good thing. We're seeing that relief, that he's being more dovish now. Future's turning a little bit negative here, by the way. Amazon coming in, Google coming in a little bit. So I'll watch that in a little bit here. But so now what I think smart money is going to say and look at is why is he being dovish? Is the Fed overdoing it? And I think that most of us can figure out, yeah, they've definitely overdone it. I mean, we've hiked rates at a historic pace here, and we have not felt the effects of a lot of them. So I think he's looking at data and potentially starting to get worried here. And we have the yield curves that are well inverted here. We all know the writing's on the wall here. But in the short term, the market can hold up. There's nothing to say it can't. Now, what will change? Well, I mean, first of all, you've got resistance up here at this red bar high. We basically went into that. We pulled back just a little bit. There's levels above that. Of course, the big gap fill up there. Lots of bags being held up in that area on the triple Qs. You can see we're going up into this red bar as well. I believe that might be into a 7.5 fib here, I think. Yeah, we're pretty much very close there. So a lot of resistance up here in this level in the short term. But basically, what I just told my members here, what I'm looking for, and it's pretty simple. It never changes. But you just get a high volume reversal. That's really what does it. One of these that will do it. But again, you could get an island. So, like I said, this isn't quite the best example here, but it's similar, where you have this push up. And then kind of just after a gap here, after a big move, and then it just kind of rolls over. And you did get the high volume reversal really kind of after it was the Jackson Hole speech, and which is right where we're into right now, which is probably why we backed off a little bit. These buyers turned into sellers now. But we look for that high volume reversal, and that will cap this rally. And we will start to move lower. But right now, they're really doing a good job of getting all the. I mean, the amount of just yesterday, the amount of bears that flipped bull on my timeline, pretty tremendous, a lot. So again, nothing to say we can't go higher. Market's in squeeze mode. I wish I had held my longs a little bit longer. We came up into these resistance levels. I didn't think we would quite get through that, but that's what just positioning matters, and that's the way she goes sometimes. But anyways, so yeah, those are the levels there on the spiders. Let's take another look at Amazon. Yeah, so now down to 109. Let's flip over to the after hours look. Yeah, so coming in a little bit, and Google L, yeah, down to 103. So that's that's just lost all of today's gains. Basically, so you're at 10. Well, okay, maybe not all, but you're down to 103 though. If this were to open down here, that would be an interesting look. I mean, you'd basically be opening right here, right in this area. That would be an interesting. So you'd lose that 200 moving average there. We'll watch that tomorrow. Amazon here, 109. So that one's actually holding kind of the lows of the day. So that's in a little bit better shape here. But if this gets back below gap fill, it's going to want to go to 100. And then you'll have some support right around 99. But anyways, the Apple's the big one here. And that is slightly lower after hours, but their earnings are not out yet. They usually report around 4:20 or 4:30. I don't know if I'll be able to take you into that. Either way here, it doesn't really matter to me. Again, like I said, well, you'll know when this thing is topped out. It won't be very difficult to find. But right now they're getting in. There's lots of FOMO, lots of late bears are getting squeezed. Those guys who were shorting down here, they're really getting the squeeze here. And you're seeing retail jump on board. This is bear market over. We broke the trend line, so the trend line must be the be all end all. Carvana is up, 400% or something like that in a couple of weeks. Actually came in pretty sharply here. But yeah, that's the stage it's set right now. Russell 2000 here, also parabolic. This is not what you see at the beginning of a bull market. This is what you see at the end. Small caps, dash for trash, that type of thing. Parabolic here. The Dow is really the only one that hasn't performed. Still kind of holding that wedge pattern there. That can still get to 345, and it may do that. Maybe we'll see next week if the market holds up, if Apple holds up after earnings. That is always a possibility. Over to the semis. So the semis held up all right. They do look a little tired to me as well. Starting to get parabolic here, and you can see here on the intraday, we gapped up with everything else, and then we just kind of went sideways up until about 12, and the market really kind of broke out around 10:30, and the semis started to lag a little bit. So a little bit of laggership. It's only one day, but if this continues and the semis start to roll over, or they can't get a bid and the markets are moving higher, that is definitely a red flag. But for now, they're safe. Into a lot of resistance though here. Really on a lot of things. You did get through this pivot. That's a good sign. But you got that red bar right above that, and you're already overbought going into it. So, just be careful here. Again, we'll give the market the upside bias till it tells us otherwise. But right now, we're seeing mass. This is mass FOMO here. By the way, IGV, red bar high, 200 moving average on the weekly. It's a little overbought going into that. So you got resistance there as well as those sell-off bars above that pivot. But, it's holding up for now. Again, possible little like island candle there. So we'll watch that going into tomorrow and into next week. But this is holding up, well for now, and we'll respect it. Now on to the most ridiculous chart of the day, the Dow Transports, by far the most ridiculous. What can you say here? We went up into that previous failed bear flag or inside bar, bullish inside bar. And that's basically where we backed off of. This was up at basically 15.9 at one point today. Transport's up 3% today. Just massive move here. Massive move. So transport's again starting to get into resistance here. And they are parabolic as well. Overbought, need to pull back. Everything, you name it. That's what it is right now. But they're holding up, and you got to respect that for the time being. Power move there for the DJT. Let's take a look at FedEx here. FedEx was up big. Yeah, FedEx up 6%. That's a big move for FedEx. 6% was coming into this trend line as well. This probably wants to get up to about 220, 225. So big move there on FedEx. UPS also up huge, 3.4% on the day. Big move there. All right. Anyways, over to rates here. So rates, here's another kind of little thing that's going on. Here's your other red flag, I guess. Bonds are not really confirming this rally here, and the 30-year still has a lower high. I'm not sure what to make out of that. I do have a buy signal on it right now still, so I like that inside bar. This can still move higher. But bonds are, yields are a little trickier at the moment here. I would prefer to see bonds rallying, specifically the 2-year, much more so. And it, was up decently. It was up 4 basis points. But this really needs to get going. So, again, if this rolls over and the market's still going up, there's going to be a huge problem to deal with very soon. For now, it's safe. It's holding on. We're continuing to monitor it. But just keep that in the back of your mind. Another thing, too, HYG. This did push up today, but you notice how this is just now made a higher high? And JNK, same thing. It's just now made a higher high. Versus where the spiders, they've been making higher highs, the last a couple weeks in a row, right? We've just been powering up. We're just getting parabolic here. And junk bonds are not really doing that. They're holding up, they're holding up well. There's nothing technically wrong with them currently, but I want to see them outperform, not underperform here. So I think if there's a problem, if there is a catalyst that's coming, it's going to be through credit of some nature. We talked about banks a few weeks ago, and I noted that I said, hey guys, XLF is broke down here. It broke that Powell candle, and we broke that Powell candle, days later on the spiders, or about a week later on the spiders. But I said, look, the banks are not performing well. Well, the XLF was barely positive today. And you had, look at Citigroup here. It's not a great looking candle there. JP Morgan was red. Goldman, was green. It came off the highs here. Wells Fargo, red. Bank of America, fractionally higher. So banks not really participating, which is a red flag. Now, here's kind of my thesis, potentially, or at least something to keep in mind, is the yield curves. We know that they've been inverted for a long time. This is going to hurt banks. We know that the market doesn't really care right now, but it will care. Perhaps this is some type of front running here. We're not seeing money flow into XLF. Maybe somebody knows that, hey, look, these guys, their quarter two earnings or quarter one earnings are going to be terrible. So maybe that's starting to get priced in now as we get closer to a recession. Smart money may be looking at what Powell said yesterday and saying, hey, this guy's acting really dovish all of a sudden. That's not a good thing. So because inflation's still going to be high, the Fed can't really do what they want to do. So we go into recession. The Fed just said they're not going to cut rates this year. If we slip into a recession, that's how the market, there's your setup for the market starting to panic, because now the Fed's not going to come to the rescue. But anyways, without getting too long-winded on it, that's what I'm watching there with the XLF and the banks. Oh, by the way, broker dealers were red today as well, and actually tested basically the lows of yesterday. So again, just little things to watch here. We're not going to make too much out of it yet until we start to see some real sell signals, or like I said, a high volume reversal, but something to watch here. Home builders, parabolic, extended, need to pull back here. I would think that 72 level holds by the end of the week here on the XHB, the ITB. Power move here, now just way overbought and extended, going into resistance. They got to get those bears out of there and capitulate them, and I think that's what they're doing right now. But big move there for the ITB, the VNQ also powering up here. And it got through my upside objectives here. Now you're kind of going into resistance here. This is where you broke down before, and you got back tested. We did come in a little bit off the highs there, as you can see. We already mentioned fins. Let's get over to energy. So crude here, lower again. And one thing I forgot to touch on yesterday is, crude was getting hit pretty hard yesterday, and it followed through to the downside today. So that continues to kind of support the theory that, maybe the market is a little bit worried here. But again, crude lower. I still have a lower downside bias on it. The longer you stay inside of this weekly red bar, the more I think this is going down to $60. So we'll watch crude here, but yeah, down a little bit today. Another thing that was down today, this is some rotation perhaps, but XLE, that's a big down day for XLE. So down 2.25, was down 3% at one point. It held the 100 moving average, and technically it's it's still okay, but that red bar held on a weekly close last week, and we got some follow through to the downside this week. XOP down as well. They saved yesterday's low, but not a good looking candle there. It looks like a failed breakout potentially. We'll see if it goes down and tests 130 in the near future. And then OIH here, nice outside candle, still holding this low, but if you lose that pivot and that gap, there's the 50 MA. You've got a little gap here, but it's probably down to this level again, down to 280. That would also essentially backtest that trend line. The 100 moving average is down in that area. So energy is starting to slip just a little bit here. It looks like the market is starting to flip over to kind of recession, I guess, positioning. Long tech and short energy. So anyways, another thing that, I don't know if you really, nat gas kind of does its own thing here, but if we're expecting a recession, that would be kind of making sense here. Now with nat gas, it's different because you could say, well, how can you be still bullish on nat gas if you're looking for a recession? The reasoning is because it's down 80% since August, which essentially tells you that the gains or the losses have been pulled forward. So this is a little bit of an outlier, but again, you do see that kind of dynamic working there. Nat gas just so oversold, remarkably oversold here. I do think this bottoms this month, and then we see a massive rally coming soon. Dollar index, very bullish on the dollar right now. So we had a nice little sell yesterday. Really good reversal candle today. Doesn't mean we can't get down to that 100 handle, but it held that 20-month moving average, and there's your breakout area. It's now been back tested. So dollar index, I'm very bullish on that. Let's take a look at the euro as well. I want to show you the futures. That's a pretty good rising wedge if you ask me. And we had a nice reversal on the euro today. Now, if this breaks, it's going to go right down. You got some support here at 107, and then after that, 105, which would be bullish dollar. And take a look at gold futures as well. Engulfing reversal on gold with volume. So dollar index looks like it's poised to get a bid here. That, I guess you suppose we should add that to the red flag batch. So we talked about the VIX, the VVIX, definitely the dollar index here, and XLF. But Gold's here reversal. What did I tell you guys? I said trail your stop. This is going to go to 1975. And here's your high of the day, 1975.20. So basically, if this breaks this 20 moving average on a close, I would move out of it if you're long. If you're short, just keep a stop above the high and you should be fine. This should get down. You'll have some good support around 1860. The bigger levels, 1820 to 1830 there on the daily time frame. But nice reversal there for gold. Take a look at silver as well. Tried to break out today. If you're not going to break out, you're going to break down. So silver reversing pretty sharply. If it loses this green bar low here on the daily time frame, on a weekly close, or on a daily close, this is going to go right to 22. You see the weekly pattern there. Basically these pivots down here, which you don't want to get below. Then you're going to go right down to that 250 moving average. See the 20 there as well. But metals coming in, I do like the dollar here, so just be aware of that. Platinum here does its own thing here, up 3%. It just looks like a lot of chop shop. I do favor some more backing and filling in this. You did have kind of a fake breakout there over the last month, and it is coming back in. So I think platinum is in backing and filling mode, but I will like it in the future. Again, hopefully we can play that one more time. Copper, 1, 2, 3 lower lows in a row. Actually, 5 days in a row of lower lows. So copper continuing to top out. I told you guys that topping tail should hold. It has, and yeah. We'll look for $4, 395 is a little bit better of a level, but copper continuing to come down as well. Lastly, Bitcoin here. So Bitcoin really just fractionally higher. I'm not sure if this is just disconnected from the market or what's going on. If you look at it, maybe because it might just be that Bitcoin is already squeezed. Like Bitcoin's been kind of a leading indicator. Remember, Bitcoin really started to push up here. Let's say the 12th, that was really kind of your bid, your really big bid. Yeah, and then the spiders kind of rolled over a little bit, and then they kind of moved higher. So maybe Bitcoin's a little bit of a leading indicator. We'll watch this. If this breaks down and the market is still holding up, that could be telling us something. But then you look at things like Bitcoin is basically up 65 basis points. Coinbase up 24%. MSTR up 9% here. Marathon up 6.5%. Was Riot, I think, was up 7%, 9% there. So a little bit of a arbitrage, perhaps, with some of these names. So these names are squeezing here, and Bitcoin's not doing a whole lot. So I think these names are getting a little ahead of themselves right now. Again, I'll still give Bitcoin the upside bias at 25. Nothing to say it can't happen. And, who knows? Bitcoin always overshoots anyway. So, again, that's just a tentative level right now. But a little bit interesting to see Bitcoin not participate in the rally, considering pretty much every other risk-on name was surging higher. So, anyways, let's get over here. Let's take a look at Apple. I don't think they're out. It's 4:20. They might be out. It's 4:27 p.m. 4:28. Let me see if I can take you guys into the close. It's only 2 more minutes. They usually report right at 4:30. Let's take a look over at Amazon. Yeah, so that's settling down right around 108. So basically at the lows of the day from yesterday, or excuse me, of today. And then let's take a look, one more look at Google here. Yeah, that's stuck in that 103, 104 handle. So right in this area here, we'll probably the market makers will probably open it right on the 200 moving average tomorrow, just to confuse everybody. But yeah, nice little nice little move here in the after hours off of earnings. I'm really interested to see what Apple does here. We still got about a minute or so left. I don't know if I want to go that long here. I think I've already been going a little bit longer here. Let's take a look at the futures. Yeah, so we're still up 1% here, but backing off the highs a little bit. Either way, again, bottom line here, few red flags in the surface. Dollar index, VIX, VVIX, banks to an extent. I think credit will be the problem. I think credit will be the catalyst. I think CPI is too obvious. And I think that's probably why the market didn't sell off today, or I should say yesterday, because it was too obvious, right? Like everybody wanted to short the FOMC. So I think it's got to be something that's a little bit more black swanish and kind of come out of left field. But we'll see what we get here. Again, just give the market the benefit of the doubt for now until proven otherwise. Outside of that, doesn't look like that's out yet. Okay, anyways, I'm just going to wrap it up here, guys. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.